you want to try to bring in somebody who's seasoned, because the idea is it's not about getting from A to B. You want to, if your journey is to get to Z, you want to try to bring somebody who's at least knows how to get to M.
You are the factor. Welcome to The Factor. I'm your host, Sonny Mayugba. Sit back, relax, but be ready to ask some really great questions because today's guest is amazing. I'm a founder who's experienced gut-wrenching failure and the glory of taking a startup idea from napkin to NASDAQ. And now I work with Sparrow Ventures. At Sparrow, we invest in the things that make life worth living with a focus in three key areas: well-being, work and purpose, and human connection. And we invest in founders who are building a future we all want to live in. Generational companies that have a purpose at its core and can scale to be billion-dollar companies. If you're one of those companies, we want to hear from you, by the way. So, like I said, I'm so excited about today's guest. Meet Lomit Patel. Lomit managed growth at Roku, went to IPO, Trusted ID, acquired by Equifax, Texture, acquired by Apple, and Earthlink. He has a new best-selling book. Oh yeah, in addition to taking all those companies to the top, he wrote a book called Lean AI that is part of Eric Ries's The Lean Startup series. And quick side note, the Lean Startup was like my Bible. I think I did 18 versions of Cliff Notes myself for my startup. So I'm so excited to hear some insights from that whole world. And today we're going to talk about growth strategies, marketing tactics, programmatic versus influencer, AI, GPT-3, getting your first 1,000 customers, and when we can expect a James Halliday Oasis to be a reality, which I think we're going to hear from Lomit is pretty much already here. Audience of The Factor, you are part of the show. So as you're watching the show, or if you have great questions, if you've read about Lomit, place your questions in the Zoom chat at any time. And if chosen, you get to ask Lomit live. I won't ask it, you get to ask live. So let's dive in. Hey, Lomit, welcome.
Thanks.
You are the factor.
Hey, Sonny, thanks for having me.
Hey, glad you're here. Glad you're here. We've got a really, really great looking audience here today. I know there's a lot of founders, and I'm glad that you and I get to have a conversation, albeit here in the COVID era. So let's jump in. I've got a lot of topics I want to touch on. And like I said, I have a bunch of questions. I'd love you and I to have a quick conversation, and then we'll turn it over to the audience. But let me start with this. So you're working at IMVU or IMVU, or who knows what it's called or how you say it, but you're working at IMVU. And I went to the wiki, and it's described as an online metaverse and social networking site. So to kick us off, I want you to unpack that for us. What is a metaverse and what is IMVU?
Good question. So I'll start off by saying that IMVU has been around since 2004. So, you know, for any founders out there that are still trying to get their startup to an exit, you know, have patience. that's the first thing I'll put out. But yeah, just like so the metaverse obviously is more popular now. It's kind of a virtual reality world where where the physical and the digital world kind of intersect. And obviously back in 2004, that was pretty early when IMVU was trying to sort of get into this. But what I would say is that at the core, we're like a virtual reality social network where people right now, the way most people interact in virtual reality is to create an avatar. So we've really kind of perfected the way that people can really create a real life looking avatar version of yourself. And it gives you the ability to kind of go into IMVU, where we have millions of users from around the world. And at the core, it's really about making friendships. So it's about human connection and having these virtual friendships with people from around the world and creating these virtual worlds where you can have these shared experiences.
That's incredible. So I read Ready Player One, and IMVU seems remarkably similar. Is the book or the movie based on IMVU? is there similarities there? And let's go big picture. Do you see a time when there is a reality inside of an avatar-based social network where currency happens and relationships and, points up, points down, roles and hierarchies and that whole thing?
Yeah, so Ready Player One. I don't know how many people watch that. It's a good reflection of what IMVU potentially is going. And that's the kind of world that we feel is becoming more of the norm. The reality is that there's different ways to connect with users. And virtual reality is an escape from the real life, right? For most people. And what we've found is even though it's like virtual reality, we obviously do a lot of research around our users and this whole space. The feelings that people get are still human feelings. So feelings of being validated, feelings of wanting to live an aspirational life. You can do a lot of these things in whether you want to use a word, virtual reality or metaverse. That's kind of what it is. And what's happening now is just with the exponential growth of technology and bandwidth. All of these immersive experiences are becoming more and more richer in the alternate reality world. And the other part of that is there's a lot of big companies that are really working on different ways to try and transport people into that world, whether it's through hardware, and the costs are exponentially going to keep coming down, just the nature of technology. So there's going to be this kind of happy medium where the costs are going to come down to really enable a lot more people to try and kind of get into this world. We're not talking about the world where people are trying to get a ticket with Elon Musk to go to space. That's still but the reality is you could actually go to space in the metaverse without really needing to leave your home. And it's really about you know uh, giving giving people the way to try and experience other other aspects of how life is lived, or what they might be aspiring to, even if they can't actually be able to get to that in the physical world right now.
Right.
And that appeals to a lot of people. Yeah.
It does. Well, I mean, and there's practical applications, right? I mean, do you
Yeah.
see a time when I know AR and VR can be used for light training, but do you see a time when, you know, AR and VR is used for, really deep training for surgeons, training for military? How about tourists? Do they really want to go to Antarctica or not? Do they take an avalanche course in virtual reality or real reality? Is that application coming?
Yes, it is, and one way to look at it is that with AR and VR, one of the things that it can do is it can kind of put you into environments, whether those are environments where you can learn something or you can experience something without needing to physically be there. And as physically trying to do a lot of training around, let's say, warfare or surgery, the way it's done right now, it's about actually sort of being and in the room and actually doing it on a physical person. And there's risks, right? But in the virtual world, you'll be able to do this and be able to get the skill set that's needed, because ultimately, anything that you want to learn, it's about repeating it and putting yourself in that environment and doing that. And right, obviously there's limitations to how that can be done in the physical world, but in the virtual world, you can kind of rinse and repeat that and be able to be exposed to many different facets of whatever skill that you want to get better at. And or whether that's in healthcare, whether that's around shopping experiences. As we know right now, I mean, a lot of people are limited to staying at home. They can't even kind of come out. But I mean, there's some of the retailers have already started applying some forms of AR and VR where they're actually bringing the store to you, where you can actually try things on and have a feel for is this good for me or not. I mean, one thing that really helps solve is to help you get a personalized experience on before you buy something. And it also reduces the number of like returns, which is a big problem for a lot of e-commerce retailers right now, right? Because a lot of people are buying and returning stuff. But this, but to what you're saying, the long story short is that it can be applied to a lot of different use cases, and ultimately it will just enable people to get better, faster, and smarter in learning different skills, and being able to function more productively, based on whatever they're trying to tackle or whatever businesses are trying to do out there.
Right. So let's talk a little bit about the business of IMVU. You're extremely experienced and you've been on a lot of fast rocket ship journeys. IMVU has been around for, I guess nearly a couple decades. Two-part question, Lomit. How have they survived? Talk a little bit about how the business has survived, what challenges the business has overcome, and how they monetize. And now with you there, heading up growth, talk to us about what you hope to achieve.
Yeah, so I would say with any business to survive, it really comes down to ensuring that you're trying to solve a problem that people value at the end of the day. And one thing that MVU has going for it and has done a great job of is is that it has really loyal customers, people that use the product and get engaged and immersed into this virtual reality social network, really stick around. And it really comes down to a couple of things. Why do people stick around? Because it's like anything in real life, it's about relationships. And if you look at any other social network out there, it's the same game mechanics. Like Facebook, it's about making a certain number of friends within a certain time frame. It's about getting people engaged into making friendships, engaging in chat rooms, engaging in these shared experiences. And so ultimately, once they have those friendships, then it becomes social. It's kind of like a social pressure where you want to engage. And what we found in our research is that most people that come into IMVU want to have friendships with people that aren't their real life friends. So that's it's interesting. And some people might think that sounds strange, but let me give you an example. In real life, people sort of know your backstory for the most part, right? Who you are. But if you're trying to live an aspirational life, you can kind of go into IMVU and I may not be the six-pack sports jock, but an IMVU, I can be, right?
So I can be like, I can have long black hair again.
That's right.
Like rock star in front of like 80,000, 90,000 people. Really?
Exactly. Yeah. So imagine
what am I waiting for.
So another way to look at it, you can kind of live your alter ego life in IMVU, and so
it's addicting, isn't it?
It's addicting.
Is it addicting?
It's very addicting, and people don't realize, but the average time that most people spend on IMVU, it's about like an hour a day.
So it's like a social network, right?
It is a social network.
An hour or two a day. So have you figured out? By the way, this is fascinating. Have you figured out? I think all of us have seen Chamath's L7. The 7 friends in the certain amount of time.
Yeah.
And that's when the inflection point to addicted Facebook user versus non-addicted Facebook user that he figured out. Yeah. Brilliant, simple but brilliant. Yeah. Have you figured out something like that, and are you willing to share it?
Yeah, for us, there's two things. It's it averages to about 7 friends in 10 days. But beyond that, but beyond that, the other thing that is a really strong predictor, and I'm going to use the word lifetime value. Hopefully, people know what that means. It's someone who ends up sticking around and spending the most money on our platform. The key predictor to that is to get somebody to pay to spend a nominal amount within the first 7 days of like $1. If we can get somebody to trust us by spending $1 in our platform, then that's a really good predictor that they're going to continue to keep spending, and all of those micropayments add up to really meaningful numbers.
Mm-hmm.
over the lifetime.
Simple and brilliant. That's great.
Yeah,
And so,
and
yeah,
so to answer your question, the business model, that in terms of how we monetize, because that's
yeah,
important too.
yeah, please.
So we monetize users through in-app purchases, and so what we've done, genius or not, but we've created our own currency. It's called the IMVU credits, and just like with any currency, it has a lot of meaning in the virtual world because people need to buy those credits with real money and then redeem it to buy virtual stuff, either to
Mm-hmm.
customize the look and feel of their avatars or the different worlds or the experiences that they want to engage in. And the average with every new user, we always give them like 4,000 free credits to get started. And the trick is, we test this in many different ways, but the idea is you give them enough credits to get started, but enough to become and look like a rock star like you, right? So what happens is once they start customizing, you've already got them engaged in the game because what they've invested at that point is time, right?
Right.
They've already invested time into the game to create the look and feel of the avatar, and then we start, within the first 24 to 48 hours, we can really quickly predict whether someone is more likely to pay for those credits through in-app purchases, or the other option that we give them if they're not able to pay for the credits is to earn those credits. So they can earn those credits by doing what we call indirect advertising options, like rewarded videos, filling out surveys, or these other ways that we can monetize on the advertising side, where they're committing their time in order to earn those rewards. And so ultimately, we've got a pretty good predictor on which of those two ways that the user is going to fall into as far as it comes to monetizing. And then the rest of the product experience from that point on is going to feed into into which path that we feel the user falls into.
Makes perfect sense. So since you went there, let's talk about user segments. I mean, you just talked about the outcome and then the decision tree you take as a growth head on what you're going to do and where you're going to, lead users. How are you capturing all the user data? Have you built a CDP? Was there one there? What tools are you using? And not only talk about what you're doing, give advice for, for early stage startups on, who haven't yet executed on a customer data platform. What should they be doing and what should they be, capturing about users to build the segments precisely for what you're talking about?
Yeah, I think, this is really important for any startup, no matter what stage you're at, is capturing your customer data and ensuring that you're capturing it in a place where you can get access to that data. And so for IMVU, I was fortunate, I joined a company, and we've always been data driven, and we have a lot of data events. So for the most part, we built our own CDP, customer data platform, and that's that's where all of our data is sort of housed, primarily because it used to be on the desktop. But what happened when the time when I joined, it was right around the time when the company was pivoting into going into mobile. So it was a great time because mobile became a great growth engine. But the difference between desktop and mobile was that it gave us the opportunity to sort of leverage some new tech, as a tech stack for gathering our data, because we didn't want to sort of, use some of the legacy stuff. So we ended up using a new mobile measurement partner for that. So we work with a partner called AppsFlyer when it comes to,
great. Yeah. AppsFlyer. Yeah. For attribution and okay,
for
great.
attribution measurement.
Yeah.
So
Fantastic.
yeah, so at a high level, we have all of our mobile data coming in from AppsFlyer. We have our desktop data coming in from our data warehouse. All of this feeds into a customer data platform, and then we use another platform called LeanPlum for all of our customer engagement and CRM data for all of the events, tracking all the user behavior that users did in our app. So all of this, these are kind of the three main sources that where all the data comes in from. And then from there, that's where we sort of have all of our like AI that's kind of, feeds into that. And from that, we're able to sort of build, as you mentioned, user segments, personalization, what's the right monetization, that somebody falls into, and then all of the experiments that go around that is orchestrated from those data signals.
Brilliant. So you mentioned AI, and I really want to, you just wrote a book called Lean AI, so I want to go there now. I noticed in your book, you talk about AI is for smart marketing. Let's talk about AI, and I want to start with, if it's okay with you, I want to start with GPT-3 because it's topical, right? I mean, it's swelling on the internet. People are going wild for it, and it's not just predicting food. I haven't used it yet, but from when I'm going to predict that Lomit wants a burger or some sushi. It's writing like cover letters for people. I heard it's building user interfaces. I mean, there's these tweets going around of like GPT-3 is like like next level craziness.
Yeah.
Why is it such a big deal?
AI in general, or GB3?
I mean, both.
Both. I would say the reason why it's a big deal is because now it's just it's ultimately it's about user data, right? User data by itself, just sitting there is of no value unless you are able to extract insights from it and figure out how you want to leverage those insights. And so, that's where the power of AI comes in, because for the most part, the way most companies have done or whatever
That's
to
right.
kind of comb through all of this data, and that's great, but the reality is most people don't work 24 hours 7 days a week 365 days a year, and even if they did, they wouldn't be able to like handle the astronomical volume of data that's out there right now, because if you think about it, Sonny, good and bad, we live most of our lives on digital now, right? And so
That's
there's
right.
so much velocity of data coming in, and so with this data coming in, if you can layer artificial intelligence and identify good use cases, that's what it comes down to at the end of the day. Because I mean, AI, just like any technology, can go in many different directions. But the question is, what are the most practical use cases? So to what you're saying with something like GB3, I mean, they've identified use cases because ultimately, it comes down to, is this going to help provide value to the business value coming in the form of either it's going to drive better retention, engagement, or is it going to help drive, cost savings, or it's going to help drive more revenue,
Right.
or some factor of that. And
Right.
yeah, and this is the kicker that people don't realize, but we all know, is that we have less patience now than we did yesterday, right? And
So
our
true.
patience is going to continue to go down, and we're more distracted, even though we're probably working from home or whatever. We're just bombarded with so much stuff, right?
That's so true.
So this is where having AI is really important, because ultimately it's not about getting the insights, but it's about getting the insights and taking action on it in real time at that moment when
Brilliant.
somebody is most likely to react to it. That's
Brilliant.
that's the secret to why AI
So I heard
works well.
that's brilliant. You said you had AI at the center of your CDP. So all the
Yeah,
customer data platforms coming from the
yeah,
data warehouse,
yeah,
attribution, the drip campaigns, all the
yeah,
experiments, and then you have AI in there. How are you using that? And I know you've coined this term smart marketing. How
yeah.
are you using AI and smart marketing? Unpack that for us.
Yeah, so the way we, the simplistic way to think about it is that, with growth, my team's responsible for the entire customer journey. That means, from user acquisition to retention and monetization. And the great thing about being responsible for the entire journey is that, as you know, the customer funnel has different aspects to it, right? From awareness to conversion to retention and to monetization. And so where we're using all of this is that we're feeding it into the different pieces of the funnel to help us to get better and smarter around. An example being, when it comes to like acquiring customers, we spend a lot of money on digital channels, whether that's Google, Facebook, and a bunch of other like ad networks or partners. What people don't realize is that all of those partners, at the end of the day, the way it works when you buy when you buy advertising, it's like an ad exchange. It's kind of like the stock market where it's based on
Mm-hmm.
supply and demand. And so where our AI really enables us to get, cost efficiencies is that, it instead of using a unified sort of, price that we pay for different users, it's basing dynamic pricing based on different ad exchanges at different times, based on the lead score that because we're basically creating these segments of good, better, best based on what
Nice.
lifetime values are. So our dynamic pricing, for example, we may pay up to, I'm just using an example, maybe, a $5 CPM for you, but for somebody else, we know isn't going to monetize as well. We're willing to pay $2, and ultimately it's about having this machine that's automated all of these levers around managing bids and budgets on
Right.
top of the creatives, because we're testing thousands of different creative version
Yep.
variations to figure out what's the message that ultimately works well with somebody like Sonny, and then how can we find more customers like Sonny and expose them to similar messages. And so all of this is
Right.
just orchestrating. All of this orchestration is very complex, but going back to the whole idea of lean is, in the old days of growth, I would have probably had a team of like 30, 40, 50 people needing to do all this. Now I just have a lean team of about 4 or 5 people because the machine does all of the heavy lifting for us.
With
And
better results, likely.
we're ultimately
No
better.
offense to
Yeah,
growth people, but like
yeah,
ourselves,
yeah,
but
yeah,
yeah,
yeah.
it's just optimizing at scale like that the human brain can't quite yet do. So
yeah, and reduces human error. There's always human error.
right,
Yeah.
right. And I mean, I love that you. So is that something you built? Is that something that IMVU's built? That is, it's either built or put together. So it's out optimizing bids based upon user profiles. So you can acquire this customer, which we believe will have an higher LTV. I'll pay a little more for that one. This one we think might have a lower LTV. I'll pay a little less for that one. Is that right?
Yeah, and actually, this might be helpful for a lot of founders out there. One of the other things that I learned over the years, being in startup is, you know, you know, time and resources are scarce, right? As and so, how you spend your time and your resources is so important. So, one of the things that I wanted to do coming to IMVU was to make sure that we just focused our resources on providing the best user experience in the product, because ultimately the product has to shine no matter what, right? Because that's important. And taking people off that and trying to get prioritization on a roadmap for something like this, which for the most part, a lot of people didn't really have the skill set for, would have
Mm,
required needing to hire like data scientists. Doesn't make a lot of sense. It's kind of a pivot away from the core business. And so what I ended up doing was I started looking at different startups in the Bay Area, like who's trying to solve this problem, you know, but doesn't potentially, figured it out.
mm-hmm,
Because what I was able, what Envy was potentially able to bring to the table is that we have a lot of data,
mm,
and we have a lot of relationships with all these different partners, so we're able to get into alpha and betas to get APIs to automate a lot of these tasks and processes that we're talking about. But I didn't want to get into the situation where we either built this, because I know from my previous experiences, when you build this, building and maintaining are two different things. It never gets
yes.
maintained, and then it starts to age, and then it becomes a tech
Yes.
liability rather than an asset. And so, we ended up. Long story short, I found a company, and it was called Nectar 9, and I worked with them closely to really customize their solution to work for us, and that solution pretty much does like 95% of all of the work that we're talking about. And the
Wow.
great thing about it is it's a SaaS platform, and we've kind of
Hmm.
set it up in a way where they can actually take that tech, and if other entrepreneurs want to sort of piggyback off that, there's an opportunity for them to kind of learn from what we did.
Very cool. Repeat that name. It's next to nine.
And Nectar 9,
Oh,
and
Nectar
he's,
9. Okay,
yeah,
cool. Nectar 9. Awesome. I'll have to check that out. And great tip for founders.
yeah.
Speaking of time and resources, and really wrapping everything you're talking about, you and I share this big time, Lomit, which is analytics and data and insights are what power the decision-making process. I've noticed that a lot of startups, and I'm back at a startup again,
Yeah.
core meditation, like any startup, you start at square one. You don't have an analytics discipline. So how do early stage startups begin the journey for an analytics discipline? What steps can these founders take to, integrate and live in a culture of analytics and data?
I mean, for me, going back to, several, even at IMVU right now, for the most part, you want to try to look at what's free that's out there right now that can do the job, right? So, if it, primarily if it's web, then Google Analytics could be pretty good for that. But having said that, most of the world is on mobile now, so that doesn't really work. And so, you know, you know, I think it's important, and based on the volume of where any early company is, for the most part, it's not going to cost a lot to try and integrate with, let's say, an apps flyer or Just or someone, because your volume isn't there. Because normally the
Right.
pricing is based on like MAUs or
That's right.
whatever, right? And so the idea is, for the most part, a lot of these companies give you some kind of break up to a certain tier where you're not really paying next to nothing, and but at the end of the day, it's always better to go with something like that where you've got the integration in place, so as the business does start to scale, you don't have to do a whole nother, like, you know uh, upgrade to try and bring another solution in, because
Right.
because this is the key thing, and I think, you and I appreciate this, is that you with data, you want to always look back at your trends too, right? And so if you
Right.
have one integration in place, you can always go back. If you start changing, then you lose a lot of that historical context.
Exactly. You never load historicals back in because it's
Yeah,
too much of a lift and there's too much
that's
to do.
right.
So the advice is look at the best in class platforms. They either
Yeah,
have a free version
yeah,
or a small SaaS version, and your
yeah,
volume's so low it's okay. You grow
yeah,
into it. That's
yeah,
brilliant.
yeah.
Audience, remember, drop your questions in the Zoom chat for the brilliant Lomit here on any growth strategy. You can get as specific as you want, or as simple as you want. And you'll get to ask him live here very shortly. But I've got an interesting question. I mean, you're at Roku, which I think is just amazing. And you were the first marketing person, I believe, at Roku.
Yeah.
So talk to us about founders. How do they know when they're ready to hire that first marketing person? And tell us a little bit about your journey of building Roku to going public.
Sure. So, so at Roku, I was really fortunate, and generally, when I've joined startups, I usually feel it's generally been like Series B, right? When they've raised their Series B for the most part, because the idea is, and you know this better than me, but you don't really want to be bringing in like heavy hitters till you've really figured out product market fit.
Right.
And product market fit, for the most part, and I mean, you get some concept or vision of what that could be during the seed round, but the Series A is where you sort of come and prove it out, right? And once you
Right.
prove it out, that's when it makes sense to bring in, your first hire. And instead of marketing in, I would say, bring in somebody with a a growth marketer, because ultimately, bringing in, I mean, marketing, as you know, falls into like a couple of different camps, whether you want to come from the brand side or the performance side. But for the most part, you know, bringing somebody in, and I guess my bias is because I come from the performance side, is that ultimately you want to have somebody in there whose interests are aligned with the founder right from the start, because the founder's interest is aligned in the sense, like, you want every dollar to be accountable for, right?
Mm-hmm.
You know, you want somebody coming in who's spending the money like it's their own money, and that's generally the mindset that you get with performance marketers, because everything's trackable, so nobody can like BS around the numbers, a lot, and the good thing is, you know it's all about the growth hacking mentality, right? Because it's about running experiments and really, ultimately, the secret to growth is is to really just the process of running having hypothesis, running as many experiments, taking some big bets. You don't want to farm, you don't want to bet the farm on it, but you want to, be able to take calculated risks and be able to really figure out what's working and what's not. Because, one thing people don't realize, the biggest challenge with startups isn't necessarily like money, it's time. It's like time in many ways, because you can never get the time back. And so, you want to try to leverage your time as much as possible. And another tip that I would have for founders, coming back to Roku quickly, what I found working at Roku, and one thing that really helped us to be successful was the hiring philosophy that they had. And that's one company where I found that they're really strict about hiring, at least that I've been involved in, where generally, when companies raise some money, let's say Series B, then it's a matter of, hey, let's go out and start hiring some people. But when it comes to hiring growth people, they generally want to try to hire people that are going to be more cost effective. So bring in manager levels, because it's about, hey, we want somebody to be hands-on. But that's kind of the mistake, because the philosophy at Roku and a lot of like tech startups that have done pretty well, you want to try to bring in somebody who's seasoned, because the idea is it's not about getting from A to B. You want to, if your journey is to get to Z, you want to try to bring somebody who's at least knows how to get to M, so that and so that it kind of accelerates your time frame to get to M, and then maybe that person might not be the right fit from there to Z. But don't bring in somebody who's going to just get you to B or C, right? And the cost, it's opportunity cost at the end of the day in hiring. Hiring is hard enough, right? But it's the opportunity cost of, of the amount of money that that could get potentially wasted just by running experiments, because you're bringing somebody in who hasn't really, been through that journey before, that is just trying it out and basically learning on your dime. You don't want that to happen as a founder. You want to bring somebody. And so if that means, being more competitive on the comp initially, it's worth it, because at the end of the day, what happens is everybody has an ROI, and in growth, it's pretty easy to evaluate if the person is going to work out or not, because how much they're spending, how much they cost, and ultimately, is this a positive or not for the business, right?
Right. No, you're echoing, we had our Sparrow Ventures Founder Summit last week, and, the mighty boss, Meg Whitman, said the exact same thing you just said. You hire ahead a bit,
Yeah.
and that's a skill set a great CEO needs. Where are we going? Who's the person I need to hire for growth that will get us there to M? I like the way you phrase that, really well. Okay, Lomit, we're going to switch it up. Oh, go ahead. You got another point? Go ahead.
Yeah, and so quickly, just to mention about, in terms of the whole massive growth of Roku, it ultimately started because with me coming in, the whole business was, unlike other hardware businesses where they're generally going to retail, Roku was never going to do that. We wanted to be a direct consumer business. I know more D2C businesses are popular now, but this was back in 2008. There weren't a lot of business. But the great thing about, for me coming into that environment was that the CEO basically set up the whole business and the support system to really, pretty much get me the resources that I needed to really figure this out really quickly on how were we going to become a D2C business, how were we going to acquire customers. And for the most part, it worked out. It's really important to have alignment between growth and a CEO, whether you report directly to the CEO or not, because having that halo support makes a big difference. And that, I would say, made a huge difference for everything that I ended up doing at Roku. And beyond that, obviously, we had a great product, and in terms of fundamentals are important. And then the other thing you want to do is when it comes to growth, you just want to, instead of trying to try too many things, focus on a handful of strategies that could really work. and nail that and scale that to as deep as it can go before you start adding other things. Because one of the mistakes a lot of growth teams do is they just try to like throw a lot of things at the wall and then hope something's going to stick. And so at Roku, really early on, two things that really worked really well for us. One was strategic partnerships. Nobody would even think about it that way, but at the end of the day, early on, we knew that we were going to be a platform, and it was about value, simplicity, and content. Content was the thing that was the magnet to bring people in. And so, before we could go and sort of acquire users and tell them about content, we identified if we can bring in a lot of these big content providers or partners like Netflix and Hulu and thousands of other content creators that wanted to get into the streaming side of the business, as well as networks like CBS and Fox, it gave me and my team the ability to do a lot of co-marketing where we could leverage, working with them to really create this really early awareness to people that had a vested interest to where we were working towards the same goal, which was for them, it was to try and develop a new channel for streaming. And for us, it was to acquire users where they were vested to help us to educate their users to come onto Roku. So that was one thing that really helped us. Another thing that helped us was, sometimes, as a startup, you want to try to identify like who's the big dog in this industry that you might be trying to disrupt. For us, there wasn't a real direct competitor, but everybody compared us to Apple TV, which was great because Apple's a great target to work off. So I used to do a lot of PR too back in the day for Roku, and it was for the most part it was pretty easy to get into press stories because it was all about the David and Goliath story, right?
Right. That's brilliant. So, okay, we're going to have an audience question right after this. One more tee off of that comment, because what you said is very striking, and I hope the founders are listening. It's really, really important. You said, don't throw a bunch of stuff at the wall. We're going to try 84 different things with little tiny budgets and hope one of them hits. You're saying pick a few bets and experiment on them. When do the founders here know whether it's working or not? When do they know whether to give that experiment up and try a new one? Or when do they know, oh, this is working, I'm going to double down on this? What signals are they looking for?
Yeah, so there's always early indicators that you want to look at. So, taking Roku as an example, we were trying to sell a product, right? So we knew, what the cost to acquire a customer was. And so, knowing, early on that we're probably going to have to pay above what we're looking to acquire a customer, but you want to see that trend start to come down as you start getting better at figuring out who's the right audience, the right message. That trend has to start coming down. For us, we didn't really give ourselves like a lot of room. Ideally, we wanted it within like 4 weeks to see the trend close to where we needed it to be. And another thing we figured out, in the process, like in order to try and, get closer to the CAC that we had to get to, we could do some upsells in the process, and that's when we started doing upsells in the registration flow where people were buying the product. Then we were recommending cables because we had huge margins on the cables, and that's where we spent a lot of A/B testing to try and test different price points, different messages to get people to buy the cables. And what people didn't realize, we were pretty much making a profit even as a hardware business on every sale we were doing, because the whole mindset from the CEO and the founder was we're not going to sort of just build a crazy business where we're just going to go and just do growth.
Right.
And so that put into check and balance into when's the right time to continue to scale the growth, because as you start because it ended up bringing in working capital that got used into manufacturing more product. And
so there was a strategy for the company, profitability, good unit economics. Then there was a strategy for marketing. We know our CAC, we're willing to pay a little above that, but we want to see that price decline over 4 weeks. So you built a strategy, then you go execute, and if it hits those marks, you double down. If it doesn't hit the marks, you don't try anymore. This is great. Okay, Lomit, we're going to change it up a little bit. I could talk to you literally for 6 hours, but we've got a great audience here live at the Factor, and we're going to switch it up a little bit. So we're going to head on over to the Zoom chat. And our first question, and you get to ask this live, so be ready to unmute yourself, or Veronica's going to unmute you, comes from James Sowers. James Sowers, you have Lomit live.
Hi, Sonny. Thanks for taking my question, and congratulations on your book, Lomit. My question was, how do you think about protecting against the bias in the data in the AI you're using? Thanks.
Do you mind just repeating that second part? I think I caught it, but I just want to make sure.
Oh, yeah. The second part was, how do you think about protecting against the bias that's in the data in the AI when you're using it?
Yeah, that's a really good question. And the bias in the AI models are really important. So the way we try to mitigate against that is that even though we have the machine kind of doing a lot of these AI algorithms for us, we have a data scientist in-house who overlooks those models. So we always try to audit those models, every month, to make sure that we're not over-indexing in terms of the type of audiences that we're going after, as well as, in terms of the messages that we're using, and more importantly, that everything's kind of in line with the values of us as a business, because every company has different values, right? And so, I would say, the short answer is that we do have human oversight into, digging into those models for us, and we look at that pretty regularly.
Cool. And you can manage that at scale.
We do. Yeah.
Yeah. That's beautiful. Awesome. Okay. We've got another question from the audience of The Factor. James Wang, unmute yourself. You have the mic with Lomit.
Thanks, Sonny. Thanks, Lomit.
Hey, James.
First, I want to check, like when you're bootstrapping and then you want to really grow fast before spend time taking institutional investors. What is the best way to see different top talents of marketing people and how to make them join you? And also, when you started bring initial users, right? A lot of them could be noise from AI perspective. And how do you screen through, and how do you say, okay, I need to tweak my marketing strategy based on, I think this is better, I get more traction this way, or just 80% of people say this way, then I change. That might be out of the 80% might be half of them are noise. I mean, how do you look at those things?
Yeah, I can start probably with the second part of that question, which is, how do you sort of factor for the type of users you're bringing in, whether it's the right quality and it's not just.
Right.
Yeah, and so I mean, for us, it's really easy because we have clear definitions of what success is. As far as what's the lifetime value of a customer, what's the cost to acquire a customer, but more importantly, another thing that we look at is a payback period. So if we're spending a certain amount of money, how long does it take to recoup that money back? And so with our AI, we're always looking at users based on cohorts. So whenever a user's coming in, based on the time frame, we're always tracking that user from the time they register and how they mature into the product. Not only around how we're able to monetize them, but also us being a social network at IMVU, the value is for people to engage with the product too, because that provides a network effect to other users. So all of these signals are being tracked. And
so do you do some prototypes, like this kind of users, they will have this pattern and that different ones, so you just follow that?
Yeah. So that's what I meant, and I said it really sort of simplistically, but we pretty much create good, better, best audiences based on all of these different data signals. And so, based on which category a user falls into, whichever those buckets are, then we kind of have a baseline on how those users behave on those cohorts, and then we're always looking at these new users that are coming in on how they basically match up to the baseline. That's how we sort of make sure that we're not just injecting a lot of noise. And I think the first part of your question is a really important one, which is how do you attract like new sort of growth marketing talent to like an early stage startup? Was it something?
Yeah.
You know, I mean, for me, you know, you know, I can kind of tell you what attracts me to like join startups. You know, I mean, part of it is what is, you know, what's the vision for the business? You know, what's the problem that the founder or the CEO is trying to solve? So I feel, you know, if the founder story is really important, because, you know, that really helps to connect a lot of people to come, you know, whether they want to be part of that journey with you or not. But the other thing that's important too is that, you know, it's important to try and sort of attract people with the right mindset too, especially early on in the business. And so there's two types of mindsets. You know, the mindset is, you know, does this person want to be an employee, or do they want to be an owner? Because you want an owner mindset type of person. So it's like the, you know, that they're coming in and they're going to be, you know, treating the business like it's their own business, and the way they sort of, you know, make decisions, it's going to be based on what's right for the business. You know, so I feel, you know, going back to, you know, if you can attract, ideally what happens is if you can attract someone, you know, who's a little bit seasoned and experienced, then generally what happens is they usually have a good network already. So if you bring in the right person and you're able to get them to buy into the vision of where the business is going, and more importantly, you know, make them feel like that, you know, the thing that I use as an analogy is, do you want to be a passenger or a driver in a business, right? And you know, it's the line that I usually use when it comes to recruiting, because, you know, ultimately in growth, you know, there's no one better set to really know how well the business is going to do, because you have such a big influence into how the business is going to grow. And so, you know, it's not about coming in and betting on the business. You're really betting on your own capability. Do you really feel that you're up to the challenge to really make this business successful? Because no one has more of an influence to really help that business be successful than somebody coming into growth marketing. And that's where you can sort of figure out, is that person really going to wants to step up to be an owner, or do they just want to be a participant in the ride? And you know, based on that, you know, the people that want to step up, you know, will step up at that stage, because generally most people in growth, you know, want to take on a new challenge, you know.
Mm-hmm. Very good. Another question. So, Alifia, you've got the mic. Ask Lomit anything.
This is great. Hey, thanks, Sonny and Lomit. So I had a follow-up on that last question, which is, you've got a number of subscribers, you've got all these people coming to you, and as you sort through this noise, I think, as we characterize it, maybe because there's so many people, how do you figure out within all that, is it AI you use or something else, who your ideal customer is? Because it's how you shape your future strategy, right? And your future segments. So how do you sort through this to identify them?
Yeah, so for us, we use a lot of AI for that, you know, because it's all about. I mean, there's two ways to look at AI. I mean, simplistic way, you know, we use machine learning, but there's two forms of machine learning. There's structured data and unstructured data. What we try to do is, you know, we try to sort of practice both of those, but with unstructured data is data where we just throw in a whole bunch of all of this data signals that are coming in, where we don't really know what it means, but we try to sort of, you know, get our AI to know what the outcomes are that we're trying to get to, and figure out with this data, what's the right way to optimize this data to get to these outcomes. And based on those outcomes, once we have clearly defined, because it all starts with targeting the right customer, right? So we use that to target the right users. Then once you target the right users, it's about ensuring that you're giving them the right personalized experience to really predict out pretty quickly, what's the best way for us to retain and monetize those customers. And so, all the time we're always making predictions, based on based on actions or behaviors that they're taking or not taking. And, I mean, I can't say 100% that we get it right all the time, but we're always working to like an accuracy rate of like, 80%, at least 80%. And for us, just like in business, you got to be willing to risk, instead of looking for perfection, you want to look for direction. The question is, how much are you willing to trade off on that to depend on how quickly you want to scale?
Okay. Audience, hang with us. We did get started just a couple minutes late, and I'm going to go a couple minutes over. I've only gotten through about half my questions, and we're going to have you back, Lomit. Just telling you. But talk to us. You wrote a book. You're connected to one of the startup Bible authors of the world, Eric Ries. Talk a little bit about Lean AI, your book. What will people get out of it when they read it?
Yeah, one thing I'm not sure if people know, but I'll put it out there, is that Eric Ries is actually one of the co-founders at IMVU. So,
cool.
And I know that you read his book,
yep.
But I don't know if you realize his book was actually based on IMVU.
Really?
Yeah. So
really?
the whole
concept of MVP was based on IMVU.
It was based on
every
IMVU.
Single founder in the world uses.
That's right. Yeah.
Oh my goodness! Build, measure, learn was based on IMVU.
It was based on
that's
IMVU.
why that's why there's your answer. Why did it survive for 2 decades? Because of build, measure, learn.
Yeah.
Brilliant. Yeah. Okay. Interesting.
I know. And so so I was fortunate to have access to get to know Eric from being involved in the company. And my idea was, what would be the next evolution of his book if he was to kind of write it today, right? Because ultimately it's all about increasing your velocity of learning. It's all about experimentation. I mean, obviously when Eric did this, there was no AI. It was all around, just running experiments. But now with AI, it just increases that velocity of how many experiments you can potentially run. And the big challenge with any business is really, once you get to product market fit, where do you go from there? Because that's when the journey starts getting even harder. It doesn't get easier, because that's kind of the entry. That's a ticket to get into the game. But once you're in the game, and so he encouraged me. I was fortunate that he liked the idea, and he told me to sort of come up with a book proposal. And this is full disclosure. I said, sure. I had no idea what he meant by a book proposal, but I went to Google and figured it out. and then I came up with the book proposal idea. And long story short, he connected me with O'Reilly. And but the book basically is a continuation of what the whole theme is around being lean. And it's about being lean, but with growth, it's about, increasing that velocity of learning and really just leveraging AI. And so what the book goes into, it's kind of two sections to it. One section is really about digital transformation, on how AI can really give your business the competitive advantage, right, to really grow. And AI, what people don't realize, AI is already there. So it's not a matter of having to go and build this. It also talks about my own personal journey on how I was able to stitch this thing together, which I think is really about being resourceful, which is why it really, I think it would really help a lot of startups, because it's about being resourceful on how can you take what you have to really make this work, right? And to what we were saying earlier, we're fortunate now where, we don't have to go and build all of this. It's kind of there. It's just a matter of just putting the right pieces together to get it to work. And then the second part of the book talks more to, once you have that, how do you leverage that? What are the right growth strategies to put into place? Because once you got the technology, it's like you still got to have the strategy to make it work. And that's where I sort of lean into my experiences working with a number of different startups, and ultimately what were the right growth strategies that really made a difference. Because it's not about, at the end of the day, it's not about just growing. It's about finding those inflection points to really get from A to F versus A to B, right? I mean, and how quickly can you get to those inflection points? And based on the different business models that you have, and the book kind of talks about how to take those giant leaps to the next stage.
Incredible. Well, I'm going to channel my inner Oprah right now, and I'm going to say, audience who stuck around listening to these brilliant quotes from Lomit, 5 of you, we're going to buy a copy of your book, of Lomit's book, and send it to you along with an awesome Sparrow t-shirt for whoever makes the best social media post. You got to tag Lomit and tag Sparrow Ventures. It's at Sparrow Ventures and at Patel Lom, I believe, on whatever platform you like. And Veronica is going to judge the best 5 and send you a package. So you got 5 more book sales, buddy.
Thanks, man.
We're going to wrap up here in a little bit, and get to work on that audience. You can do screenshots, do some quote Lomit, whatever you want to do. But my last question for you, man, is what is one piece of advice from the Lomit Patel Playbook that every founder should know and that you would have given yourself back in your early days?
That's a tough question, but what I will say is, I've been fortunate to have worked with a number of different founders, and so I've got to work with founders that were first-time founders and founders that will multiple times that have been through that journey. And what I find the big difference between the ones that have done it more than once is focus. What I find with first-time founders that I've worked with generally want to try to take on too much and spread themselves thin. And it comes back to that whole question of, time and resources and money, right? I mean, everybody just has 24 hours. How do you want to allocate that? Because that dictates how the rest of the thing is going to play out. And what I found, Roku is a good example. What people don't realize, Roku means 6 in Japanese, and that was Anthony Wood's 6 startup. That's why he came up with that name, Roku. But obviously, by the time he started Roku, what I loved working there was how disciplined it was. We're going to focus on solving one problem, which is to create the best streaming experience to turn a dumb TV into a smart TV at the end of the day, right? Because in those days, there were no smart TVs. Roku was the way to do that. And instead of getting sidetracked into trying to come up with all these product extensions and all these features, even today, I think anybody who uses a Roku box, there were 3 core tenets that we had back in the day, and I think it's still practiced now, which is value, to make sure the price point is low enough so you could reach a large total addressable market. Simplicity, so that you don't have to be tech savvy to really use a product. It's really easy. And content was ultimately the magnet. The more content, the more value that it ended up providing to the users.
Great advice, Lomit. Great advice. A little bit more to add?
No, so I was going to say, and the important part was, for any founder is to reiterate that frequently, so people never forget it. Because what I found, in startups is that you can have your all hands whatever, and you do the mantra, but you got to put it on the walls. You put it everywhere. So it's you live and breathe it. And that's what we did at Roku.
That's spot on. No, those simple things make huge differences. That's great advice. Loma, it's been such a joy to have you on The Factor. Thank you so much for being here. Incredible wisdom that I know is going to help the audience. As you know, everybody, we are recording this, and Sparrow Ventures will be publishing this online, both on my podcast, The Factor, and on YouTube. So look for that. Thank you all for attending live. I love having this live audience there. Thank you all for the questions. We're going to send you a little swag box for those of you that ask questions. And remember, 5 Lean AI books from Lomit Patel here, plus a Sparrow shirt for the 5 most awesome posts, as judged by Veronica from Sparrow. So please follow IMVU at IMVU, and make sure to follow Lomit Patel at Patel Lom. That's at Patel LOM. That's 2 L's. And pick up a copy of Lean AI by Lomit Patel. I know it's on Amazon. Get it for your Kindle or order a copy. We're going to post this episode of The Factor next week. You can always follow me at Sonny Mayugba and at Sparrow Ventures. Be on the lookout for episode 4. It's going to be really fun. And maybe episode 5, we'll get Eric and you back on. We'll talk about the early stage of MVP and where we take it. That'd be fun, Lomit.
That'd be cool.
But big picture, Lomit, I want to thank you for being The Factor, man.
Thanks for having me. Really appreciate it.
I'm so glad you're here. No, it was really good. And until next time, everybody, stay safe, never give up, And if you're an awesome company that is looking for investment, send us your deck. If you're already launched and you're looking for growth strategies, get a hold of Lomit. See y'all next time.